got an expert in the world of options. We have Randy Frederick, Director of Derivatives at Charles Schwab, and he joins us from Austin, Texas. Good to have you with us, Randy. Happy New Year.
Hi, Pimm. Happy New Year to you. It's great to be with you.
Randy, let's talk about the VIX first. The VIX around 2021, I believe, today, a little bit elevated on a big historical basis. But as I said, what a difference in the year. What's the VIX signaling to you?
You're right. It's interesting. If you look at the VIX over long term, like, say, for many years, the actual long-term historical average is around 16%. Now, if you look at it just over the past couple of years, it's actually around 20%. So even at its current level, it's actually around its maybe last 2-3 year average. So it's not that high. But when you compare it to, obviously, where we were in the spring of this year and the fall of last year, it's come down dramatically, as you said, 75%. So at these levels, it's actually at a point where what's interesting about the VIX is that it tends to move, obviously, the opposite of the market most of the time. And as the VIX falls, you would expect that the market would be rising, which is what we've been seeing for several months. But what the VIX has a tendency to do is make sharp changes when it gets to really historically low levels or historically high levels. And where it's at right now, even though it's not exactly at the bottom because it was at 19 a couple of days ago, at 21, it's very close to that. And there's certainly a possibility that we could see a bit of a snapback. And when we do that, of course, that's going to correlate with a downturn in the market potentially here in the next couple of weeks. All
right, a downturn in the general market, but you've got some insight into some specific industry groups, some sectors. Tell me about what you're thinking having to do with technology.
Well, we have sector analysts at Schwab, and we look at all of the 10 major market sectors. At the moment, the only sector that we actually have an overweight rating in is the technology sector. And what's interesting about that is it correlates very closely with what we find when we talk to our active traders. We did about 500 really large client events last year. And we poll our active traders who are the ones that attend most of these. These are people who are not necessarily day traders or anything like that, but people who are actively engaged in the market, who trade regularly, who watch the market on a daily basis. And the poll we did in July showed that they had the most optimism in the financial sector, which is typically a sector that, as you know, tends to lead out of recessions and when the market starts to recover. But the last survey that we did for our last two big events that we did in October, they had actually moved financials down, and now they saw the biggest opportunity in technology, which I think is consistent with what you were talking about with your previous guest, and it's consistent with the sector that Schwab has the overweight rating on. Our active investors see the most opportunity in technology, despite the fact that we've had a pretty good run-up in tech already.
All right, in technology, what about any underweights, Randy?
Underweights, utilities, and we've had utilities underweighted for quite a long time. And, you know, again, that's kind of a defensive sector and one that you tend to see at late cycles. We're obviously not in that section right now. It's been in an underweighting for quite a long time. All the rest of the sectors we're market perform or neutral on.
What about open interest as a measurement tool? What is that signaling? That's a more longer-term symbol.
Right. So I analyze a lot of different things within the options market. I look at put-call ratios that are based on both open interest and volume, and I separate the index activity from the retail or from the equity activity. And the reason I do that is because index activity has a tendency to be very heavily weighted in institutions, and they use index options primarily for hedging, whereas equity option activity tends to be very much on the retail side, and most retail traders are directional. That is, they're trying to make money on an up market or a down market. So what I see in most of these things,
we're going to have to leave it there. Unfortunately, Randy Frederick from Schwab, appreciate your spending time with us. More